Hey, in today's video, we are going to be talking about how to actually pay yourself as a single member LLC. How do you get that sweet cash from your business into your personal account? Because it's kind of a little bit confusing and you're like, I don't want to do something wrong and have some tax problem. The answer is actually really simple. What you do is you have your business checking account. In that account, once you understand your numbers, you can take out what's called an owner's draw in your LLC, and you're going to write yourself, your name on the check, and you're going to make it an amount that is appropriate so you're not, taking out too much money, and then you're just going to cash it in your personal checking account. Now, in the memo, you may want to write owner's draw and the date of that owner's draw, whatever that date is of that day, but it's that simple. So now you're probably wondering like, well, if it's that simple, why is this video so much longer than like 1 minute long? Well, that's because I want you to understand what I want you to do today as an LLC and then what the future looks like so that you can save on taxes. So a little bit of a story time going back a little bit through my own journey, which I think will help to inform you and yours based on where I'm making an assumption of where you're at. Now, hopefully, you're at the LLC, recently started business, you got some cash coming in. But then when your cash flow starts going up, you may want to make some changes for your business, which is going to help you save some of that sweet moolah. All right. So for me, I started out as a sole proprietor. Wasn't sure what I was doing, kind of fumbling around in my early 20s, trying some things. Nothing seemed to really work and make a few dollars here and there. But then as I started making more income and having more liability, I set up an LLC, limited liability company, right? So this is going to help protect me, but it doesn't help me save on taxes. And the reason for that is when you have an LLC, you have to pay self-employment taxes. So you can think of it this way, like when you're an employee, you have taxes taken out of your paycheck. Well, the business has taxes taken out on their end for each employee as well. When you become an LLC and you're paying yourself and you're doing that owner's draw, you are now going to pay 15.3% in self-employment taxes on that money that you're making, the net income of the business. So it's no longer being split with your employer because you own the business, right? So as I started to read more content online, watch sweet videos like this one, right? So I started learning like, okay, an S corporation has some added advantages to it that an LLC does not when it comes to taxes. And the number that you need to be aware of, and the reason I'm letting you know this right now is maybe you're not there yet. I want you to have a vision in place for your business when you start making more income. So it's not like 5 years from now, you're like, oh my gosh, if I had known this 2 years ago, I would have saved $15,000. I want you to know it today. So when you start to have about $40,000 to $50,000 of net income in your business each year is when you may want to consider an S corporation. Now, the reason for that number is because it costs money to set up an S corporation. It's more expensive to keep, and then it's going to be extra accounting and extra taxes you have to file, etc. It's a little bit more complicated, but the reason you're going to do it is because you're going to save on taxes. So a service that I really like that I've mentioned in previous videos is called InkFile. The page that you're looking at right now, this is an S Corporation tax calculator, which has a couple helpful things on here, including a calculator. So if you scroll down here, this is really where it hits right here. I already have it highlighted, is the distribution as an S corporation. So remember I called it like an owner's draw. It's also called a distribution. So when you take that money out of the business and put it into your personal account, you will only need to pay federal income tax on this distribution. So when you're in the LLC, you're paying the full 15.3%. Well, now you're just paying the federal taxes as an S corporation. So that's where some of the tax savings comes in. What this doesn't mention too is when you pay yourself, you have to pay yourself a salary as an S corporation. You have to pay yourself a reasonable salary. Let's say like your business is making $100,000 of net income a year. You can't pay yourself $120,000. You don't have enough money to do that. But if you're the CEO of your business, you can't pay yourself $5,000. That's not reasonable. What you need to do is try to pay yourself as much as you can. And I've heard different rules of thumb for this. I've heard 1/3 of the business net income. I've heard pay yourself at least this much. Talk to a CPA, potentially an attorney, to understand what a reasonable compensation for your business structure would be. They're going to have advice on that. But if you're making like $300,000 of net income a year, you should be paying yourself what you be paid in that role. So if you're the CEO, like if you're making $30,000 a year, what that does is it creates a red flag and the IRS is like, hey, this person's saving a ton on taxes because they're doing these distributions and they're paying themselves nothing as a salary. So that's something they're going to come after you for. So pay yourself a reasonable salary. Now, the other cool thing is when you have an LLC and you pay yourself a salary, that is not a tax deduction for the business. So let's say that you're making $100,000 in net income a year and you pay yourself a $60,000 salary. You are going to pay taxes through that salary, but it also becomes a tax deduction for your business at the end of the year when it comes to your net income of what you have left over. So when you go back on this document here, let's go down to the S-Corp tax calculator. So here you can kind of slide it and we're going to say that we have $100,000 in net income per year. And just to make it not a clean number, I'm going to make it like $51,000 is what you're paying yourself a salary in that S corporation. So looking at this, as a sole proprietor, which I mentioned I started out as, you'd be paying $14,581. Sole proprietor, LLC, it's the same. You're paying that self-employment taxes, which is that 15.3%. That's where a lot of this income is coming from. As a corporation, $7,803. You save $6,778 by being set up as an S-Corp. So just something I wanted you to be aware of is that when you're starting to make more money in your business and you start approaching a kind of predictable $40,000 to $50,000 threshold of net income each year, you may want to elect to be set up as an S corporation or set up an S corporation. When you become a business owner, the complexity goes up. There's no getting around that. And you're now going to have to learn different things. Maybe it's understanding payroll. It's understanding how the tax implications are for you. You have the business side, you have the personal side, liability, all these things. It's a lot. And you know what? It's kind of a good thing, because if it wasn't more complex and it was super easy to become a successful business owner, everybody would do it. But because a lot of people aren't willing to take those steps, not willing to put themselves out there like you are, that's the reason that this opportunity is afforded to you to be able to take control of your life and really live life on your terms. But I'm just shooting straight with you, there's a lot of things that can create overwhelm or confusion. So what I'm going to do in the next video that you can see on the screen right here is I'm going to walk you through resources that are going to make that overwhelm and confusion go down. That's because I'm going to give you one-page resources that allow you to follow simple instructions and get reminders of important dates in your business, things that you need to file, and the steps you need to take to continue to improve and move down your journey as a new business owner. So I'm going to catch you in that next video.